You ever think about investing and then that little voice in your head goes, nope, don't have thousands of dollars to spare? Well, that whole idea, we're about to blow it wide open today. Let's dive in and I'll show you how you can start building actual wealth with just $100.
Before we even touch on stocks or apps or anything like that, we gotta start right here. Because, the biggest wall that stops people from investing, it's not actually the money. It's the story we tell ourselves that what we have just isn't enough. So the number one thing you can do, literally right now, is to flip that script.
So this is our magic number, $100. That's it. And yeah, I get it. It might not feel like a life-changing amount of money, but trust me, in the world we live in today, it's all you need to get your foot in the door.
Okay, but let's be real. The big question is, can $100 really turn into actual, serious wealth? Is that even possible? Well, stick around, because the answer is a huge yes, and I'm going to break down exactly how. All right, first things first, we have to tackle that giant myth in the room. You know the one. The idea that investing is some fancy exclusive club just for rich people. It's funny, because it wasn't that long ago that this was actually true. You had to have a ton of cash, you'd pay these crazy high fees, these commissions on every single trade, which would just devour a small investment. And on top of that, you usually had to buy a whole share of a stock, which could cost you hundreds or even thousands of bucks. But listen, that world, it's completely gone. And these three things right here, they are the reason why. They've completely changed the game. Think about it. Zero commission trading is now the standard. No account minimums means you can start with $5 if you want to. But the real revolutionary idea here, it's fractional shares. This is huge. It means you can buy just a tiny piece of a company. So you want to own some Amazon or Apple, you don't need to save up hundreds of dollars anymore. You can buy a $10 slice, a $20 slice, and boom, just like that, you're an owner. Okay, so we've established the old barriers are gone. The doors are wide open. So let's get practical. What tools do you actually need? And where do you put that first $100? For almost everyone starting out, the best place to begin is with something called an ETF, an exchange-traded fund. The best way to picture it is like a pre-made grocery basket. Instead of you having to go pick out hundreds of different items one by one, this basket already has a little bit of everything in it. So when you buy one share of that ETF, you're instantly buying tiny pieces of hundreds of different companies. It's instant diversification, and it's a brilliant way to spread out your risk right from the get-go. Now, you've probably also heard of mutual funds, right? They're kind of similar, but for beginners, ETFs just have some killer advantages. I mean, look at this. ETFs trade all day, just like a regular stock. Their fees are usually way, way lower, and there's often no minimum to buy in. Mutual funds, they can have these big minimums, like $500 or more, and the higher fees can really, really drag down your growth over the years. For a beginner, it's kind of a no-brainer. So where do you buy these things? You need an online brokerage account. Think firms like Fidelity, Charles Schwab, you know the names. And when you're choosing one, this is basically your non-negotiable checklist. You want zero commissions on trades, no account minimum, and, this is crucial, make sure they offer fractional shares. And hey, if they have a slick, easy-to-use app and some good free learning resources, that's a massive bonus. All right, you've got your account set up. Now for the fun part, the part you've been waiting for. What do we do with that first $100? Let's build a simple, powerful little portfolio right here, right now. Check this out. It's a super simple plan. We're going to take the biggest chunk, $60, and put it into what's called an S&P 500 ETF. Think of this as the foundation. It instantly invests you in 500 of the biggest companies in the US. Then, with the other $40, we'll split it. $20 into a piece of Apple and $20 into a piece of Amazon. Why them? Because you know them. You use their products. And that's the key. You're not just investing money. You're investing in something you can actually follow and understand. And here's what that looks like. You see that big 60% chunk? That's your stable base, your foundation. And then those two 20% slices, that's where you get a little more direct action, owning a piece of these giant, exciting companies. For someone just starting out, this is a beautiful, balanced way to begin. I love this way of thinking about it. Imagine your portfolio is a sneaker collection. That S&P 500 ETF, that's your classic go-with-everything pair, your Air Force Ones, right? They're the solid foundation that always works. Then the individual stocks, your Apple, your Amazon, those are the cool, trendy pairs you're really excited about and want to own. You start with the classic, and then you add the pairs you love. Okay, now this next part is maybe the most important thing we'll talk about. Because getting that first $100 invested, that just gets you in the door.
It's not the thing that's going to make you wealthy. What really builds wealth is what you do next.
The real secret sauce, the magic ingredient to building wealth, is just consistency. That's it. And the hands down easiest way to be consistent, you automate it. You go into your account one time and you set up a recurring transfer. It could be $25 a month, it doesn't matter. Just set it and forget it. You're taking your own emotions and your own forgetfulness completely out of the picture. You're just building wealth on autopilot.
And if you want to see why that habit is a superpower, just look at this chart. That first $100 investment. Yeah, over 10 years, it might grow to around $260, which is fine. But now look at the other bar. You start with that same 100, but you just add $25 a month, a tiny amount. That portfolio could rocket up to over $6,500. That's not a typo. It's not magic. It is simply the unstoppable force of consistency and compounding. Okay, before we wrap up, we have to talk about something serious. As you're getting started, you've got to protect yourself. Because, let's be honest, the internet is swimming with bad advice and flat-out scams. So let's go over a few dead simple rules to keep your money safe.
Memorize this quote from the SEC. This is rule number 1, 2, and 3 of investing. Nothing is guaranteed. Every single investment has risk. If anyone, anywhere, ever promises you huge returns with no risk, they are lying to you. End of story. Real investing is a long game. It is not a lottery ticket.
So keep your antenna up for these red flags. Somebody promising guaranteed money, run. Somebody pressuring you to invest right now, run. Somebody claiming they have secret or insider info, run away faster. These are the oldest tricks in the book. And remember the golden rule. If it sounds way too good to be true, it always, always is. So where do you go for good info? Simple. Go to official, unbiased sources. A great one is the SEC's own site, investor.gov. You can check people out, get real, objective information with absolutely no sales pitch attached.
Look, here's the bottom line. You don't need a mountain of cash. You don't need to be a Wall Street genius. You don't need to perfectly time the market. You just need to start. And with $100 and the tools we have today, you have literally everything you need to take that first step, to start building the habits